Sunday market outlook. Let's go ahead and get this show on the road. We're going to do Forex trading, and then I'm going to do fundamentals, and I'll walk you guys through some of the news events. We got Omi on here is going to show you guys some charts. We have Austin potentially on here, Joseph Tesfaye on here. So we got a bunch of our educators on the call. Let's have a great call. Let's go ahead and start with the technicals today. We'll keep it interesting. GJ, I was explaining a different concept yesterday with risk and reward, but basically, guys, we've had this massive bullish jump off of the daily trend line. Let me do a full analysis of this in like 30 seconds. This is how fast you guys should be able to do your analysis. You should be looking at highs and lows. So we're obviously in an uptrend because we have the lows down here, high, lower high, or sorry, lower low, higher high, low. We're just getting higher and higher and higher. And here, we're still respecting higher lows. So now we've just had a massive push off of this daily zone. Whenever we have a massive wick rejection like this, look at what happens in the past. Massive wick rejection up, price comes back down about 50% of the trade before we have a continuation of that trade, and then eventually a continuation of the trend itself. So here we have GBP JPY, which is the pair that I'm looking to really catch a swing trade on. What I'm going to do is I'm going to line up my price action first, and then I'm going to draw the Fibonacci because I want to use price action as my main confirmation for all of my trades. Price action is king. Price action is king. Quick reminder for all of you. If it's your first time on the call, welcome. My name is Roy Dunya. I'm the co-founder of Chart Addicts. We're an education service focused on helping traders succeed all over the world. We've been working since 2018 to make sure traders succeed by using very simple concepts. So one thing that you will notice about our calls is that we keep things simple. Simple is key. Simple will get you paid. Complex fails. Simple scales. Complex fails. Simple scales. So the more simple your strategy and the more that you have an innate and a very, not an intuitive, but like an intimate understanding of your strategy, and you really get this thing inside and out, you're going to be a lot more effective. And doing that simply is the best way to go. Okay. GJ, we have this zone right here. I'm going to measure the wick from bottom to the top of this bullish retracement. Let's look at some of these common areas. I'm going to add the 50% here and the 38% as well. All right, so the 38% is right at this key level, 38 being a pretty important zone for higher time frame continuations. So you get a push up. Even if the market drops, you still want to see price close above the 38 before you start really, really loading up on buys. 38 is like my higher time frame kind of like king confirmation. If price breaks below the 38 and then it breaks back above it and retests, creates a higher floor, this is one of my favorite trades. The 61 trade is very enticing as well, and the 38 trade is the second most enticing. All right, and so I'm looking for a pullback on GJ back to this pink zone. I want to see a wick through, just like we had a wick right down here. This was a very aggressive, hopefully not this, but the same way that we see wicks here, a wick here, a wick here. Do not be naive by setting a tight stop loss, y'all. I see a lot of courses, services, 10 pip stop loss, 15 pip stop loss. And like for the trader who's teaching it, it works because the person's fucking 7 years in the game. Yeah, he's very, very adapted to using that smaller time frame strategy. You should not be using a 10 or 15 pip stop loss. Most traders shouldn't, because you're going to underestimate the entry sometimes. And then these wicks are going to happen. Instead, what you should do is you should understand that wicks are common before a reversal. And you can either do what Omi does and wait for the wick to complete. And once it closes, then you can start to enter trades and catch the continuation, the reversal. Or you can try and be mindful of the wick. And when you're entering these zones, have a wide stop. I would much rather wait for the liquidity grab, wait for the liquidity grab, wait for the liquidity grab, and trade the market after. Okay? So I'd rather wait for the market to pull back down, liquidity grab through, and close back above, and then we will take the trade and make money. Got it? My overall target for GJ is 168 for now, and then we'll talk about those 170s after GJ is done retracing. We can talk about fundamentals after. I want to make sure that the coaches and the educators have a chance to show you guys their charts as well. Last week, I had taken this trade on Euro USD, but I had closed out prematurely. I didn't close out prematurely. I put my stop and break even, and it kicked me out. This is still a pretty decent trade, but I feel like it still has room to retrace. I feel like we could retrace all the way back. And for those of you guys who are a bit more new here, I've been going through Euro USD for months. We're in this channel. Every time price forms a floor, we break under it and retest. We form a floor, we break under it and retest. We form a floor, we break under it and retest. We form a floor, we just broke under it. Now it's time for price to come back up to the 0.995 and retest. to continue this action that we've been having. And that will be the perfect entry for us for a swing trade for sells. So Euro USD, we have this 0.995 area right here. This is going to be my main trade this week, is waiting for this sell entry. And yes, we will call this on Enigma, put some respect on it. So big swing trade, break the lows. We'll just keep it, we'll leave it the open, we'll leave an open TP for now, honestly. Okay. What else? So the current trade that's running right now, I believe that the market has a very good likelihood of breaking through. And so what I'm going to do during London session tonight is wait for a liquidity grab here. And if I see a liquidity grab to the upside and a pull back down, then I will short at the 61. Okay. So I hope you guys understand what that means. Price formed a false floor and then it broke right under. And then now we're starting to close under. 1 wick rejection, 2 wick rejection, 3, 4, 5, 6. So all I need left is 1 wick rejection up and a retest, and I can short it. Does everybody understand that concept? This is the single most important concept that we all talk about here at Chart Addicts, is we talk about demand zones and we talk about liquidity wicks straight through the zone to indicate a momentum shift. Let me know if this concept makes sense. All right, UJ will most likely continue to break. I can still see this short though. That's the thing. The dollar still has a little bit of room to pull back. This is the dollar. This is the trade that I'm taking, guys. So if I can just skip everything and just go straight to this one thing, if the dollar goes up, everything that has a US dollar at the end of it, so all the pairs that have XXX USD at the end of it, they're all going to go down. And so I'm going to sell GU and Euro USD, GBP USD and Euro USD because the dollar is going up. And I also want to buy UJ because the dollar is going up. Again, if you guys don't understand the basics of the currency correlations, please go back to the mastery course. The mastery course will literally get your life right. All right. But if the dollar drops, then obviously the other pairs do the opposite. So the play that I'm seeing here is that the dollar has a little bit more room to the downside. We can go back down a little bit more before we continue back up. Okay. And so Euro USD, same thing. And same with UJ. I feel like UJ can do a little bit of a dip before it continues up. And Euro USD can do the opposite. It can make a little bit of a dip before it continues. Does everybody get that concept of the currency correlation between the dollar and these other pairs? Put a 1 in the chat if you guys get the currency correlation. Then I'm going to pass the chart over to one of our other traders. Let me know. Currency correlation between the dollar makes sense? We'll talk about fundamentals for some of you nerds after. All right, if you guys stick around to the very end, if you guys want to hear about fundamentals, I'll break down the news, what we're looking at this week, and I'll break down everything to watch out for. For those of you guys looking for the trades, hop on here and sit tight. We got a few of our coaches ready to go. I did not go over NASDAQ. NASDAQ is my baby. I tried to go long last week. I made a little bit of money, but the market had other plans. Break even hit. So now we have the zone, smaller time frame. What I want to see early this week is a push off of this level and then a pull back to this 11,000 key level. So just remember 11,000. I want to see it pull back, form flat, liquidity grab. Don't forget the liquidity grab. Never, never, never. Straight drop to the downside. Okay, so 11,120. That's the area I'm watching. And this could go as high up as 11,200. So look at the pink levels as my shorting zones. Shallow retest is the downside with the liquidity grab special, or we get the number 5 combo, deep pullback. So basically, guys, just always look at the trend. We had a massive drop off. It's either going to make a little mini tap and go, or a deeper tap before it goes. So the mini tap, that's my first option because the markets are hella bearish right now, very bearish. And I just feel like there's nothing that's really positive coming up that's going to make the markets turn around. I'm writing an article saying that we're near the bottom of the markets because on the higher time frames in the next 3 to 4 months, we will see the bottom of the markets. Okay. So keep an eye out for that. But Chart Addicts members, I'll be keeping you guys posted every single day. Like I said, every single day we are live trading in the mornings, New York session. And Chart Addicts members, every single day we're going to be doing a market recap at 7 p.m. So I will keep you guys posted on which one of these it is. I think by tomorrow morning, we'll have formed a floor on NAS and we'll have started to consolidate. Early morning, we'll get a spike up. 9 a.m. We'll live trade together and catch the short down. If it's like a little move, then we'll have a deep pullback after. If it's a real move, we'll keep pulling. This is what I mean by we're going to get this sell regardless tomorrow. Whether it continues or whether it reverses from here, that's what we don't want to gamble with. But we're going to get that move most likely, and that's going to be the trade I take tomorrow. Just letting you guys know in advance so I can say, I told you so when David chops up this before and after edit. Guys, isn't this stuff fun? I know that trading is supposed to be boring. They say looking at charts and numbers and math and all this shit is supposed to be boring, but hopefully you guys are entertained enough. Hopefully you guys are learning something here that you're not learning somewhere else, or we're keeping it simple to a point where it's kind of sticking to what you got to do next. So next up, co-founder, Chart Addicts, Omer, Mr. 100% win rate. He has a 100% win rate on the funded account, trades FTMO, 100% win rate on Enigma, the signals app that he calls, and he's an incredible trader. So if you guys don't have your notepads out, now is the time.
Hey, what's going on, everyone? Hope you guys are doing well. I think my trade of the week is Euro USD. I'm seeing shorts on this position just based off this overall structure that we're getting. As you guys know, the first thing I like to do is look for the overall direction. And it's obvious to say that this thing is going down. So in this long-term trend, I want to be looking for shorting opportunities. So we can see that we managed to have a huge shift in direction where we cleared this area of support. And now we're coming back to potentially test as resistance. All right, for me, I want to see a deep pullback or penetration into this zone, maybe a fake out and then a wick down. I think that would be the last thing I need to see to call this signal. Again, overall bearish. So we want to look for sells. If we want to sell, we want to sell high at areas of resistance. And we're just getting a lot of confluence at the zone. We're getting maybe a third touch of the trend line, that 0.99 key psych level. And it's also testing a key fib area. All right, probably around the 60% as we can see. And we can see that we managed to create this head and shoulders kind of structure. All right, break of the neckline. So if we get that retest, I would love to see that continuation. All right, so pretty simple. Do you guys have any questions? All right, so it's for me, again, it's still not at the zone. So if we can pull back a little bit deeper, show some wicks, I think that would be the last thing we need to see to call the short. You guys can see last time we got that pullback at a previous area of support, turn to resistance. Again, that wick action, and then that follow through. So again, we want to see that pullback, that wick action, and then another follow through down. So I think Roy was looking at this as well. I'm seeing the same thing on it. So it's always, I guess, an extra confluence when you have other people seeing the same thing as you. You know, that was clear. Thank you so much, Althea. Appreciate you as always. I think this is my trade of the week so far. Hopefully we get some nice midweek reversals, some other opportunities that set up. But other than that, that's what I'm looking for.
So another incredible Sunday market outlook. If you guys want to stick around, I'm going to go through news, fundamentals, and other things that you guys might want to go through. I'm going to go through some of the popular pairs, gold and US 30, just because I promised some folks that I would. And I am kind of a goat. I've been calling this trade all week. Good stuff. All right, so I think one more pullback, 1670 in shorts. That's exactly what Joe just said. Joe, I see the exact same thing. Too easy. Massive bearish drop, pull back to the 78. We came up and wicked the 88 almost. And then now we're sort of coming back up to that next fib level, which is at 1670. So 1670 shorts, that would be the retest. That would be the retest for continuations to the downside. TP1, 1650. 1640, and just take it every 10 points at a time, honestly. Hey, Roy, can you show us how to read and implement fundamentals? We didn't do it yesterday. Sounds good. Yeah, I got you, bro. Done deal. All right, so gold I'm actually really happy with. Nothing is loaded. Oh, here we go. Go ahead and save that for later. That's dessert. US 30. The people's favorite pair. By the way, Bitcoin most likely headed down to 12,000. Buy more, right? I'm selling my kidney if I have to, whatever it takes. It's not financial advice. Please do your own research. Please consult a licensed tax professional, a licensed financial professional. I'm just an idiot with a screen. DXY. We already explained the dollar. We went through everything. US 30 is the last piece we haven't gone through. Okay, pretty straightforward, massive bearish action. What happens after massive bearish action? Either a shallow pullback and drop or a deep pullback and drop. And so that's the two scenarios I'm looking for US 30. Yeah, so US 30, same situation. The shallow pullback has 29,000 flat. So if there's a level to write down for your notes to short at for this week, is 29,000 flat. Now, if the market starts to close above and gets extremely aggressive above the 29,000 region, goes up to grab like another, 200 points to the upside, that's when you can short from here. And then as price breaks down this level, you can short on the retest of this level. 29,000, very key level, previous buying level that we just violated. And we're going to pull back for a shallow retest before we continue shorting. 29,000 and then 29,250. Those are the two levels. So option one. And you always look left, buying level, selling level, buying level, buying level, selling level. If it comes back to the zone here, we're going to short again. And so 29,200 and then 29,000. Those are the two levels, or 29,250. Those are interchangeable. All right, so we did U30, gold. Everything's looking gorgeous. Forex factory. Anybody want to do some news, fundamentals? So this is the part that I'm kind of geeking out about. So I'm not going to rush through this. If you guys want to hop off or you guys have things to do, this is the part of the call where we've basically gone through the majority of the technicals. We'll post this up later for members. But this part, I'm going to go through the news events for the week. I'm going to do a short version for those of you guys that got to go. And I'll do a bit of a more extended version for those of you guys who want to learn a thing or two. All right, so stick around here. Let's go through some of the news events for the week. So I'm using Forex Factory. It's my go-to news site because it organizes the news events based on importance. So red folders are high impact, means they're going to impact the markets a lot. They're going to move the market. Orange means medium impact. Yellow, not so important. So I go up here to this filter. It's a green tab on the top right. You click it and you can deselect these unimportant ones. I don't want gray. I don't want the yellow. I just want the orange and red, the most important ones. And I apply the filter. So let's look at this week. And you can look at the calendar. I just want Sunday to next Friday. Apply the settings. So now I'm looking at the whole week and only the most important events. You can also click on this. It will tell you, what does this mean? Okay, so this is CPI. So imagine if you don't know what the consumer price index is, it's the change in the price of goods and services. So price is going up. So this thing measures how much prices are going up month over month. So they're going up 0.1%. Things are getting more expensive at the grocery store. So if you don't understand certain concepts, you can always click the folder and they'll explain exactly what does it do. And sometimes you might still not understand this shit because they make it complicated for a reason. Come and ask me. All right, that's what you guys are paying for. So Monday, pretty light. AUD news if you guys are trading it. Manufacturing tomorrow, that's decent, but I don't really care. If you're trading any CHF pairs, I would care about the CPI. That's a big print. I mostly look at dollar news with a USD. What impacts the dollar? What impacts stocks? So FOMC member Mester speaks. The FOMC is the subcommittee of the Federal Reserve that sets interest rates. And so one of the ranking members is going to be up speaking on a podium somewhere. Is he going to say something that might get us in trouble? Is he going to say something that might crash the economy? Big deal. JOLTS job openings. This measures how many open jobs there are in the economy at any given moment. And so before, we have 11.2 million open jobs in America that we need to fill. This month, the analysts are expecting 11.3, which means even more jobs have opened up since last month. We have even more available jobs. That's not good. We need to fill these jobs so we can be more productive. Having jobs available is good when it's a healthy balance. When you have too many open jobs, it's like, who the fuck is doing the work? Like shit still needs to get done. Food still needs to get grown. The system still needs to run. So JOLTS job opening is very big for me. The OPEC meetings. This is going to fuck up all the markets. So on Wednesday, if you guys are not trained in trading, I would just stay away and I would just watch the markets instead. OPEC is an organization of oil producing nations. They're the countries that produce the most oil. They have a monopoly over the sale, and the sale is all done in dollars. That's the global secret. All trade for oil is done in US dollars. Right now, as you guys have seen, gas prices hit an average of $5 a gallon in the United States. Now they're down to $3. Biden has dug into our strategic reserves. We've done a lot of emergency measures to bring the prices down. This OPEC meeting is going to be very important at determining whether or not we're going to be closer to going back to normal gas prices, or if this recession thing is going to start to kick back up. Guys, gas prices go back to $5 with the way that grocery stores and everything else, with the way the prices are going up, we're fucked. And so gas prices cannot go back up. And so the meetings here are going to be a very big political sort of theater to see, are we friends with Russia? Are we friends with Saudi Arabia? And can we get enough oil to bring things in? Non-farm payroll, this is pretty straightforward. And of course, guys, the biggest news event, this is the main platter, is NFP at the end of the week. NFP tracks the number of new jobs added to the economy every month, excluding farming jobs. Farming jobs, the government pays people to farm, and so we don't count those jobs. So non-farming related jobs, we get to track the number of new people being added to the economy, which is one of like the big events. It comes at the first Friday of every month, and it's a pretty big mover for the markets usually, even though it's kind of irrelevant. What's more important for me is the unemployment rate. The unemployment rate is the thing that I think the Federal Reserve and the federal government looks at when they say employment is good. 3.7, we're still at the very, very low end of unemployment, which means that that's really good. Everybody got jobs. We're not hurting for jobs. That's a healthy market. 3.5 to 3.7 range, very healthy market. The Federal Reserve, because of the policies that they have right now, they're sending us into a recession. And what that means is this number is going to slowly start to go up. Once this thing hits 4.2, 4.4, 4.5, you will hear the politicians begin to panic. That's when the recession clock is officially on. That's when politicians are panicking. And that's when the Fed is going to start to step in and print money. And so at some point, the Fed will step in and print money. They will pump up all the crypto. They will pump up the whole US stock market. And they will pump up all of the speculative assets that have been deflated in the past 6 months. When that happens, if you hold crypto, if you hold stocks, you're going to get rich. So you should be prepared before then. So this number, this unemployment number, this is the biggest thing to watch. If this number goes up to 4.4, 4.5, 4.6, that's the emergency clock. That's when we're officially in a global recession, and the Fed's going to have to start printing money again. When they start printing money, people, you better have your net out. You better have a bucket out when it starts raining money. All right. Food for thought. Any questions, comments, concerns about the economy, things that are happening, what's happening in Japan, Europe's gone to shit. Europe, RIP to Europe, RIP to the European Union. A lot of different issues going on there. We can go through them one by one, but just as a whole, not doing too great. Emerging markets, I think the next 2 to 5 years are going to be the golden years for emerging markets. I believe. This is just me kind of riffing about news and fundamentals and stuff, but I believe that emerging markets like, I say the Indian subcontinent, India specifically, China, and a lot of Africa, they're going to start to have percentage growth way higher than the rest of the world, because we've sort of peaked growth in 2020. America's still going to pick up, and some other countries are still going to pick up. Great Britain, I think, can still pick it up. Germany can still pick it up. Russia, I don't think so. But if you look at China, can continue to grow year over year. India, the middle class population of India is thriving at a rate that I don't think we've ever seen in any country before. So they're going to have an economic growth that's insane. You look at, I want to say all of Africa, but a few countries in Africa, specifically you want to look at Ghana, Nigeria, and Ethiopia, where there's been like major business centers that have been developing. Those areas are going to start to come up. South Africa as well. So you'll see developing nations start to come up in terms of percentage growth. Developed nations will slow down in terms of GDP, and we're going to have to start printing money to make up the difference. That's how I see things over the next 3 to 5 years. When they start printing money, you better own stocks, you better own crypto, so you can get rich.